going live in Facebook, multiple places on Facebook, YouTube, Periscope, etc. So I want to welcome everyone today. We're going to give everyone another 3 minutes. You know, hopefully you're having your lunch right now. Maybe some of you just finished lunch. So we want to welcome you here. Hey, Tara.
Hey,
How you doing today?
I'm awesome. How are you?
Doing well, thank you. So we're going to give people a couple more minutes. We're live streaming on Facebook, YouTube, etc. So I got to go open up all of the places just to make sure that I can see as many comments as possible. Definitely want to thank everyone for being here today. Also, as you're putting your city and state in the chat, y'all know I like a lot of activity. So put a 1 in the comments if you are brand new to personal finance, meaning that, you don't have any foundational items set up. You know you want to get out of debt, you want to maybe pay off that student loan, buy a house, etc., but you have done nothing. You're starting from ground zero. Put a 1 in the chat. Put a 2 in the chat if you're on your journey. You have a bit of a wealth plan, but you may be struggling with some things. Put a 3 in the chat if you're like, no, I'm on it. I'm in like Flynn. So do that for me. A 1 in the chat if you're brand new, starting from nowhere. 2, if you have a wealth plan and you're working it. 3, if you feel like, no, I've got a groove.
Okay.
Thank you so much, everyone, for putting your answers in for that as well. I'm sure that will give Tara a lot of information. And then the final thing that I will say is, if you're in YouTube or someplace like that, please subscribe. We're trying to get our YouTube to 1,000 people. And hopefully we'll be able to do that in the next couple of weeks, if not sooner. Okay, give me 1 more second, Tara. I just need to.
I see Deb in the Philly area. Hey, Deb. I'm in Delaware, so hey. Diedrich in Chicago. Cool. Oh, Marilyn. Hey, Trisha. Right around the corner.
Okay.
Little Rock, Arkansas. Okay.
So we have some people in Facebook as well. We have New York, and we have, let's see, we have a couple other places in Facebook here.
Let me try to find you and share.
All righty then. So we're going to get started now. We're 3 minutes after the hour, so we are going to get started. Want to say hello to everybody. So yeah, we have so many people coming in: Maryland, Alabama, Florida, Maryland again, New York, Georgia, Atlanta, Augusta, Chicago, Philly, Little Rock, ATL. ATL is in the building.
In the house.
All right. Rancho Cucamonga, California. So hello, Nikisha. Hope you're doing well. We also have some people in here that, you're brand new. You're just trying to figure out like what your plan is going to be. We have a couple of people in here that have a plan and are working it. We have a lot of people in here that are 3s that feel like you're in it, which I love that as well, because every time I think I'm a 3, I realize, oh, maybe there are a couple of things
right.
I can get together. So so we want to welcome everyone here today. And Tara,
Yes.
so tell us a little bit. I kind of want to start in the middle. Tell us a little bit about your wealth building philosophy. What do you believe? If somebody were to come to you and say, hey, I want to build wealth. I want to build wealth for my family, for myself, etc. I'm starting in the middle here because I always like to do that. What do you say to something like that?
I usually tell people that wealth is not one size fits all.
Hmm.
So one person's definition of wealth is someone else's definition of wealth. So it's almost like going to the doctor. You may have similar symptoms, but you could have totally different diagnoses.
Hmm.
So what I encourage a lot of my clients is to do is to define what wealth means to them. And then we work towards that and build a money plan towards that. Because my idea of wealth may be different than someone else's. Someone else's may mean traveling and, you know, living free or whatever. Mine may be being financially sound to be able to take care of family. You know,
Hmm.
so we all have a different idea. So what I encourage people is to not really get hung up on media's definition of wealth. You must define that for yourself, because if you try to meet someone else's definition of wealth, you'll find that you always fail. So you have to determine what wealth means to you. How is that going to make you happy? And then we build that spending plan, that savings plan, that investing plan, that giving plan to help you reach that wealth.
Hmm. So let me push back on you a little bit here, since you said, not looking at what media says. One of the things that, we as a people sometimes don't do is look at what other people do in order to look at the score, right? Like, we would never know, for example, that our salaries are 67 cents for every dollar that a white man makes unless we looked at the media and kept score, for example. So should there be some, amount of, hey, the average white family is at 180,000 and the average black family is at was it $1,800 or whatever the amount is. I know we're 10 times less, right? Where does that fit in to the equation, of this when
That
it comes
fits
to wealth
in.
building?
Fits in information. So you need information in order to make decisions, right?
Hmm.
So I'm not saying don't listen to media at all or don't listen to what's out there.
Hmm.
I'm just saying, you know, if Dave Ramsey or Susie Orman tells you this is what wealth is, it may not be wealth for you, but you do have to listen to the data that's out there and get the data that's out there. The more informed you are, the better financial decisions you can make that better suits you, that
Hmm.
speaks to you. Now, you can't make these decisions if you don't know where you are in the stakes of the game. You know, it's really all a game for me. So if you
Hmm.
don't know the rules of the game, you're going to get played. That's why most people get played in the financial services industry, because we're playing in financial services, we're playing the game of chess. And consumers are playing checkers because they've never been taught the strategies. And so most of the time, consumers think financial institutions are cheating. They're not cheating. They're playing by a different set of rules. So we as consumers need to understand those rules so that we can play the game too. But media, information, the internet, you know, reading, that helps you to get information that you need so that you can make better decisions.
So we're going to talk about chess versus checkers, and I like where this is going. So now that I brought you to the middle and had you like talk about from the very beginning, this is your philosophy about wealth building, and it seems like I personally would think that we need to look at reducing the wealth gap in our own four walls, our own households. And then if we have, 1 million Black families that do that, then that is in a way closing the wealth gap. So one of the things we look at 10K is how can we do these things from the ground up? But I'm going to come back to the chess versus checkers. I want to now go back to the very beginning. Who is Tarra Jackson? How'd you become Madam Money? You wrote something called Financial Fornication.
That would
There's
be
a
me.
book.
I'm that chick. Yeah.
You're that chick,
Yeah.
right? So take us back from the very beginning, of how you became aware of financial literacy and independence.
I became aware of financial literacy when I started working in the financial services industry. And
Mhm.
it wasn't until I got a little bit of seniority in my positions when I really understood the impact and I had the knowledge base. And if I knew then what I know now, I would have made different decisions because I've made some major money mistakes. I just,
Mm.
I have. I've been from, student loans, which I'm very bitter about, collections, repossession. Been there, done that. Wrote the book
I
about it.
think all of us
You,
have,
you know what I'm
though.
saying? But most of us don't really want to talk about it. Like the reason
Yeah.
why I wrote Financial Fornication is because I had a lot of celebrity clients that would go on TV and talk about sex, but they didn't want to talk about their crappy credit. And that kind of, made me upset because they gave a very dysfunctional view, or they did not show the dysfunction in that, that you are borrowing money from me to buy stuff, to bling on TV, to make it look like you had money. Really, dude? So, and then I had to look at myself. So financial fornication is really my confession, right? I have another book coming out called Confessions of a Financial Fornicator. And so it was really about my dysfunctional relationship with money and credit, and how if I had treated it like it was a man, I would have been financially promiscuous with credit cards, not just
Mm.
one, but multiple. Don't judge me, okay? And I had all these financial one night stands, and then I end up with financial STDs, substantially tremendous debt, and then babies hurt. You know what I mean? And so when I realized that once I start having that conversation that way, one, people understood and could relate, but then two, they were able to giggle and open enough to have the dialogue and conversation. Because being in a very bad financial situation is more embarrassing than divorcing or being in another type of relationship. It's like being in an abusive relationship that you don't want anyone to know about, even your friends and family. And so there's a lot of people that are suffering in silence. And I did not want that to happen to people financially, because it didn't have to happen. If Jesus didn't teach us anything else, he taught us about resurrection.
Mm-hmm.
And so I wanted to tell people that there is life after. There's life after repossession. There's life after foreclosure. There's life after collections. There is life after major money mistakes. And so that is why I decided to write Financial Fornication. And from there, Madam Money was birthed or born. A little old lady from a Kojic conference named me Madam Money. I don't know who she is, but God bless her
Now,
heart.
is the madam like, like being a madam? What
No,
did it, was it
people.
that deep, or
No,
was it?
it's really not that deep. It's more of
Okay.
an alliteration. But people, because I wrote Financial Fornication, they their minds wander. And my thing is, I don't care where your mind wander, as long as we can have a conversation about money.
Yeah.
As long as you feel comfortable about that, you can think whatever you want.
Yeah.
But yeah.
So in the community, though, there is a lot of stigma with regards to talking about money. How much I mean, even I do it, how much money do you make? What kind of assets do you have? Even if people are starting to date, if a woman asks about money and credit too soon, she's a gold digger. If she asks about it too late, she's dumb. Same thing for the men. What are some of the things that you've discovered with regards to culture and our culture, and some of the habits maybe that we need to reassess, with regards to
What I
money?
found in most African American families and households is that we do not have that conversation.
Mhm.
We probably barely have a conversation about the birds and the bees and sex, right? But we don't have that conversation about cash and credit. And not saying that not all, families are like that, but it's very prevalent in the African American community, where we just don't talk about things that are uncomfortable, right? It's a stigma. Mental health is another one, right?
Mhm.
Mental health, money, and sometimes I say men, but
Well,
you
that's
know,
one too. Yes.
there's just some things that we just don't talk about,
Mhm.
because it's too uncomfortable to talk about. But my whole thing is, even when I speak at family reunions, money is a tool. It should never have the power to tell you what you can't do or to destroy you, right? So how
Mhm.
can we convert that to make it a tool? Because money is supposed to help us to have a fun life. We are supposed to prosper and live well. So we use money as a tool. So how can we take that back? Well, we have to take ownership, and ownership means own your ship with a P. It's PG-13, right? Own your ship with a P.
Mhm.
So once we take ownership of what we have, what our mistakes were, now we can start changing certain things and having that conversation. But those are the conversations I have, especially in our community. Um, and it's not one of the other things, Cherie, that I found is that we're not all spenders, but there's a large percentage of us that speak the language of spending, right? And there's the world telling us not to spend and all of this. And one thing you don't do to a spender is you don't tell a spender not to spend money.
Mm-hmm.
And I'm a spender. I wrote a book called Four Financial Languages, and that's savings, investing, giving, and spending. And once you understand what your financial language is, that's going to help you to communicate better about money. And so what I've learned about myself is you don't tell me not to spend money. Tell me how I can spend on savings, I can spend on investing, how
Mm-hmm.
I can spend on giving, because that is my pleasure principle. But yeah, within our community, I think the more we talk about it, I think we're getting better. We're getting better at having those conversations because there's more of us. I'm in a group called Elevate, and it's, what people of color that talk about money.
Mm-hmm.
So there's more of us, people that look like us, that's having the conversation about money. So it makes it, more fun or more relatable to talk about it than it was in the past.
Yes, yes. And I found that as well, that people are starting to open up more. We're not as open as certain other communities. And who knows what they're doing behind private doors. Like I always say, we never really know, right? We just know what is portrayed to us. But one of the things that is coming up is holidays. So Thanksgiving and Christmas. And some of us, I was talking with my marketing team an hour ago about people going to see Big Mama, right? Over the holidays, and being able to have certain conversations with her, or our matriarchs, our patriarchs, etc. We're getting to a point where there's going to be a huge wealth transfer. And I was horrified, for example, to find out that Aretha Franklin didn't have a will. Like, we're discovering so many of um, our older family members don't have these things in place. What are
Mhm.
some of the things you can think of, or some of the suggestions you could give to people as we're entering the holiday season? How do we, get our money right, or have certain conversations with those family members that, um, they have a house, they've got certain other things. We don't want it all falling through the cracks of the wealth transfer, not coming, to the family members that they would want to have it, etc.
One of the things I found in our community is that we have this fear about talking about our demise and
Mm,
the estate planning of that, or the planning of that. We don't like to plan for that, which makes sense, right?
mhm.
And then anyone who asks us about it, the first thing we think of is, what, you trying to kill me off? Why you asking me about my life insurance? You know what I'm saying? So we have a big negative connotation when it comes to estate planning, where other cultures, it's different. It's the estate, it's more of a legacy planning for them. And I think once we start looking at it as a legacy plan, that I want this to live on, I want my legacy to live on. Or if I'm in debt, I want to kill this in this generation now,
Mhm.
so I don't pass it on to the next generation. And so I think it's more of a perspective and changing the dialogue. It's just like with life insurance. People don't like to talk about life insurance, but life insurance agencies call me in to talk to agents about how to communicate life insurance to their customers. And I always tell them is that stop focusing on the death benefit. If you keep talking to me about how much I'm going to get when I die, I'm not going to want to talk about it either, because I
Right.
can't enjoy it.
And I'm
So
not going to
talk
want
to
to
me.
pay the premium.
Right, exactly. Why am I going to pay for that, right? I
Yes.
understand it's going to go to my family or whatever, but
Mhm.
let's talk about what are some of the benefits that I can leverage with life insurance while I'm alive. How can I benefit life insurance in the life?
Mhm.
And so I think when we're having these conversations, it should be a celebration of a conversation. Let's have a legacy conversation. I want your legacy to live on.
Mhm.
But there are certain documents, there are certain legal requirements that come in place when we're doing legacy planning. Now, other people call it estate planning. I don't care, call it what you want, but that's really what it is. We
Mhm.
want to make sure that we're passing on to the next generation wealth and not poverty. And so we need to have certain things in place, and the way I would put it is like, what, we haven't had this in place for our family. This is the year that we need to start building legacy for our family. So we need to have things in place so our children's children will be able to benefit from this. But it starts with us today.
Yeah.
And so we need to understand, do we have wills in place? That's important. Do we have a trust in place? Now, the will tells you who to give it to, the trust tells them how to disperse it.
Mhm.
So if you don't want to give an 18-year-old $1 million, the trust can dictate how it's going to be, divvied out to that
Mhm.
individual. So we need to
Mhm.
understand those terminologies. And a lot of wealthy people now, or trust babies, the trust is funded by life insurance.
And
You
there's
know,
nothing wrong with that,
it's nothing. It's not a
I
thing.
think it's smart for some people. If you haven't been able to save in life and
Yeah.
you want to leave something in death, then, or at least to not have your family have to do a GoFundMe in order to bury you.
Yeah, GoFundMe was never meant for to be a funeral expense, but
Mhm.
it has turned out to be one of the number one reasons why people do GoFundMe's.
Yeah.
Um, and it's unfortunate, but before there was GoFundMe's, was doing,
Yeah, they were
GoFundMe.
passing the hat
Yeah,
around.
they're like,
Yes.
hey, we need you to pitch in for
Mhm.
this. And think about it. Even if I had, say, $20,000 or $10,000, that's the low end of a funeral. Low,
Mhm.
low, low end of a funeral, and I had $10,000, I don't want to have to take $10,000 of my hard earned money and
Mhm.
put it in a grave, because that's
Mhm.
all we're doing,
Mhm.
right? We're taking that. My grandmother's funeral was almost $20,000.
Oof.
That's like taking $20,000 of your cash and just burying it.
That's
You
someone's
can't.
student loan out there. I mean,
You know what I mean? So
yes.
my whole thing is OPM, other people's money.
Mhm.
If life insurance is just that, I'd rather use other people's money to put in the ground and leave my money for my legacy
Mhm.
than anything, or use that extra money to build trust babies. My future. I want my great grandchildren to be trust babies. Well, how do I
Mhm.
do that? I want to
Yeah.
leave them land. I want to leave them property.
Yes.
I want to leave money in the stock market for them and give them shares. So my nephew was just born early this month. And so everybody's buying him toys and everything like that. What I want to buy him is stock and
Mhm.
open up a savings account for him and a college fund.
Yeah.
That's that's pretty much what I do. And my sister's like, you haven't sent any gifts. And I'm like, I probably won't, but he will have a couple shares or a lot of shares of something.
Yes.
Yeah.
And I mean, that makes, and these days, fractional shares is, we, again, in the marketing meeting, we were looking at shares of Amazon and Google,
Mm-hmm.
yeah, you may not have $1,500 to $3,000 for a full share. Well, these days you can even buy
Yeah, fractional.
fractional shares. Yeah.
Absolutely. You
In
can
these
start with
days.
$5. You can start investing with this,
You can start
$5
with
a
very
month.
little money. I
You
do
know?
want to do one quick commercial break, Tara, just really, really quickly to take 2 minutes. And that is just for anybody who's new to the 10K project. We're here to help build the Black community. As I was saying before, it takes 3.5% of any community engagement in order to create any kind of social change. What we're looking to do is have 3.5% of the Black community come together to create economic change. And we do that through stable, increased income, buying assets, entrepreneurship, and generational wealth. So we're looking to create an economic development movement from the ground up instead of from the top down. How do we do that? Number one way is we have a lot of different events like this. Some of them are open to the public, like today is. Some of them are closed for members only. However, we have some great events on our website, so you could check them out at the10kproject.com. Sign up for the ones that are public. And if you want to become a member because there's something that you like that's members only, membership is a one-time payment of $100. You'll never be charged for membership again. Some of the previous webinars we've done, we had a family come on to talk about how they started their family bank. We had a woman come on to talk about financial literacy for teens. Someone came on to talk about building scalable businesses, emerging tech, splitting equity in your startup, if that's your thing. And we're constantly adding new content to our knowledge center. The final big thing that we're working on is we have filed with the SEC and FINRA to become something called an equity crowdfunding portal. And this is where the 10K project name comes from. When 10,000 everyday people put $100 into a business, that's $1 million. The community can start funding its own businesses, profiting from its own innovation, creating jobs, and building Black wealth. So we have applied for this. We have an attorney who has helped others go through this process before. We are focused on funding Black businesses because when we do that, it creates jobs, and then the community is able to profit if the company does well. And if the company does not do well, then you've only lost the money that you've put into the company. So we're not a fund. This is an equity crowdfunding portal. Again, if you believe in Black business, you believe in us creating Black wealth from the ground up, we want to invite you to take a look at us. The equity crowdfunding, we again have to say we're not approved yet. Hopefully we'll be approved, but we have to say if, for legal purposes, if we are approved, then any member that is a part of the 10K project would be grandfathered into this equity crowdfunding campaign that we are doing. So it's $100 one-time payment for life. You get webinars, you get exclusive content. We have a business directory that we're working on as well that's coming up. And again, if we are approved to become an equity crowdfunding portal, then you would be grandfathered into that as well. So if you have questions about that, let me know in the chat and I will be sure to respond to them.
I think that's absolutely fabulous.
Oh, thank you.
If and for those that are watching, if you don't have $100 to invest in something like this, that's going to give you educational resources as well as access, maybe you're not ready for that economical plan that you think that you are, because that's extremely nominal. There's a lot of organizations that charge $100 a month for access, and it's a one-time payment of $100. I can go to the bar and drink $100. Wait a minute. Y'all didn't need to know that. But it's just saying is that this is your first step in investing in yourself, and you must invest in yourself and be with a community that's like-minded people. There's a lot of, Sheree, a lot of people fail financially because they're hanging around with their family members that have a poverty mentality. And sometimes you have to divorce your family financially so that you can connect with a new family that speaks your financial language or the financial language you want to learn, right? So you may be a spender, but if you want to build wealth, you may need to learn the language of investing and savings. So you have to connect with community that speaks that language so you can learn that language. It's like, I know English, but I want to learn Spanish. Well, I'm probably going to have to get the information, but if I'm around people that speak Spanish, I'm going to pick it up faster.
You pick it up faster. And you're also more motivated. You can't get certain food unless you speak Spanish. And in the same way, being a part of the 10K project, we had a gentleman come on last night talking about his career as a data scientist. We had some people in there that said, hey, I might want to switch careers, or might want to start a business around this. We had others that say, I have a business and I want to know how to use data science in order to improve my revenues and my results. So we have so many different topics. I have a friend coming on next week, a successful facility management company owner. She's coming on to talk about how does she get started? How does she get her contracts? How does she hire people, etc. So, it's so much varied information in here. And then the final thing I'll say, the financial literacy for teens was another great topic that we had. How do you get your kids learning about money early on? And we have another woman coming on hopefully very soon to talk about how do you get the little young ones, 3, 4, 5, 6, 7, 8. And she's got some games that she's going to talk to us about so that you can get your young kids involved, so that when that estate legacy plan happens, that your kids are prepared to take the mantle and they don't squander it.
Exactly. So, getting them involved, the younger they are involved, the easier it is for them to do some more advanced things. Like there's people, they're questioning whether they should invest $100 in this program, in this plan, right? But they're scared of investing because they're not sure, what if I don't get my return? What if it this? What if it that, right? But if a child learns how to do this early on, investing is nothing. I have friends that have, started when they were 15, real estate investing, And so that's all they know. So real
Mhm.
estate investing is no thing, but there's adults that like, I don't know if I want to buy my first house, let alone start real estate investing.
Mhm.
So getting them, I love the fact that you're talking about that. And I do talk to younger kids and have different programs, but the sooner you talk to them about money, the better it is going to be to fulfill the legacy plan.
Absolutely. So then let's talk about chess versus checkers, right? You mentioned it early on. Um, what are the rules? What are some of the things we should be thinking of? How do we play chess versus how do we play checkers? I'm just going to let you rip, you know, teach us.
Well, a lot of people think that the fees are a ripoff, right? So I'm going to talk to you in the perspective of a business owner. And, I used to run a financial institution in Atlanta, Georgia. And then I'm going to talk to you as a consumer advocate. Okay. So the way financial institutions make money is through interest off of loans and interest off of investments, interest income, right? So the more loans they give, the more income they can make from it, but they need capital. So the capital are the deposits from, us as customers. So you say, oh, I need a business loan to start my business. Well, a financial institution's business loan are our deposits. And then they use our money and lend it out to other people and charge the money. And then whatever they get from that, that's what their income is, right? But we need other sources of income called ancillary products. Those ancillary products are those fee, like the fee income or the extra income and all of that, right? So we charge fees because we have to have multiple streams of income. Okay. And so it's not governed. There's a certain amount of fees that we can charge for certain things, but each financial institution creates their policies and procedures. And the examiners or the FDIC or the NCUA, they come in and check our rule book to make sure we're following our rules that we set. That's one. Okay. I need you to understand why. I'm going to explain why that's important. Because a lot of people say, you can't do that. That's illegal. No, if it's within that financial institution, that bank, that credit union's policies and procedures, and they're following it, they're in line. Now, there's some federal guidelines that we have to do, but we essentially create our policies and procedures, our fee structure, and all that. Okay. And so one of the things that I tell a lot of consumers to do, if you don't like paying fees, change your behavior, because there's a lot of fees that are behavioral fees. NSF fee, overdraft fees, those are behavioral fees. If you're going to do the behavior, you're going to get charged the fee, whether that fee is $10 or $50. If you don't like it, don't do the behavior. ATM fees, convenience fees. If you go to the ATM and you don't like the fee, go to your financial institution's ATM or go to a Wawa or a QT or someplace where they don't charge an ATM fee. So you got to understand the different rules when that comes in there, right? Even the rules of getting approved with a loan. A lot of people don't know that there could be a loan appeals process. You have to ask the questions. So you can get like if you're at a credit union and they decline your loan application, you can ask them to re-review it or to share additional information. The reason why most people don't get the money that they want is because, one, they don't ask, but two, they don't ask for it to be reevaluated. Have a conversation with the loan officer. Now, the larger they are, the harder it is. But if you're dealing with a smaller credit union, sometimes they have a loan appeals process. Sometimes, the system declined it, but nobody really looked at it. Can I get a person to look at it? This information is incorrect. You get that information updated and then go back for a re-review. And so my whole thing is you ask the questions. And I talk about that in my book, Financial Fornication, of how to date your bank. And there's 5 phases to it. And if you skip a phase, you're going to get your assets kicked, assets with a T, and you're going to get in a financially abusive relationship. So one of the things is courting the financial institution. You need to know and get to know them, because there's a lot of people in financially abusive relationships, Cherie, with their financial institution. because they
I was
got
just
in it.
thinking about that. I was thinking about the NSF fees and how some of these banks made major money in the last recession. The only thing that kept them alive were the NSF
Yeah,
fees.
if you took away the NSF fees or the overdraft fees, a lot of the banks would go under. They're heavily reliant because they're not getting the interest income because they're not doing as many loans as they used to, and they're not getting the interest income off of the investments because the investments were low because of the market, right? So that's their other stream of income. And I'm not mad, because what people need to realize is that financial institutions are not nonprofit organizations. They are for-profit organizations. Now, credit unions are not for-profit, is different than nonprofit. Okay. So a not-for-profit means they don't have stockholders to give money to, like a Bank of America. You cannot have any deposits in Bank of America, but you can own stock in Bank of America and reap the dividends, right? With a credit union, in order for you to reap the dividends, you must be a member. In order to be a member, you must have what's called a par share, a deposit or a share account, a savings account, if you will. So if you go to a credit union and you open up a savings account and you have their minimum, what's called a par share, you have a vote for that organization. You own that financial institution, right? So you'll get the benefits of that. That's the value of being a member of a credit union, is now you are an owner of a financial institution. Whether you have $5 in there or 5 million, y'all got one vote. You can run for, an office on the board for the financial institution, but that's different than a bank. Okay.
Let me find out I can be on the board of Navy Federal.
You can. You can. You have to do some politicking, but
I'm
you
sure. I'm sure. Look, trust me, I have no interest whatsoever.
you can.
Um,
But if you're a member in good standing and you meet their requirements,
mhm.
yeah, you can be a member. You can be on the board of of a credit union.
Yeah, yeah, that's interesting. So, um, the loan review, I will give you the perspective of a business plan writer, and I've been writing business plans and helping companies get funded through that process for many years. And with the bigger banks, sometimes at least from a business point of view, sometimes it actually has nothing to do with your business itself. Sometimes it has to do with other factors. I had one person from a very large bank tell me if the loan is not X amount of dollars or more, we automatically decline it. So what I'm trying to say is whenever someone comes to me and they say, hey, I'm going to go to this huge bank in order to get my business loan, I usually say, try a few small banks as well, you know? And that way, with the smaller banks, one thing that people don't know is there's usually a group of people that sits around and reviews manually the loan applications. And if you have presented yourself in a certain way to the banker, sometimes either they will have to write, like they have to write a summation of why they think you deserve the loan. And then sometimes, depending on the bank, they can go in and pitch to that group of people on your behalf. And a lot of people don't know those types of things as well.
Yeah. So what I need people to understand is I need you to think of it of dating. Think of it like dating. Okay.
Mhm.
So there's a lot of people that say, you know what, I really want to propose to Idris Ilba. Okay,
He's
he's
already
way,
married.
but yeah, and he's way up there, right? I may want to, but I may not be ready for Idris. Even though I think he should be ready for me, I may not be ready for him, right? So I might need to go down a peg or two and talk to someone that can give me what I need to have access to, at least, right? So I say, and the reason why you want to build a relationship with that person before you start asking for a whole lot of stuff. So I want to build a relationship with someone, like a man wants to build a relationship with a woman before he proposes and wants to spend the rest of his life with her, right? It takes a little bit of time, or at least communication, to get to know each other. It's the same thing with your financial institution, okay? So when I was a CEO of a financial institution, what irked me was someone who's never had a relationship with the credit union that came in and want to ask for a whole lot of money, and their credit was a little sketchy and shoddy, and there was no stability. No, I don't trust you. It's not going to happen, right? But if I have a member that's been there for 5, 10 years, they started a business, they got things in place. I know the relationship and the banking history. I'm more open to have a conversation and probably lean towards giving them a business loan. And a lot of small businesses, they don't need 250,000 or 500,000, whatever. They might need 5,000, 10,000, 25,000. Most credit unions are able to provide that with their business loan department, a smaller business loan there to get you started.
Yeah,
Or
and
you,
actually in some banks, the branch manager has sign off up to a certain amount of money.
absolutely,
So
absolutely,
yeah.
they have what's called lending authority.
Hmm.
So, and there's some credit unions that outsource the business lending side of it. But what happens is once they get a review and they meet all the minimum criteria, they're taken back to the CEO or to the VP of lending or the loan officer or whatever to make a final decision.
Hmm.
What's going to help you is if you have a relationship with the financial institution. And the great thing about most smaller credit unions is the CEO is usually in the same branch, right? Or you have more access to the CEO. Like the member, I had a branch manager at my branches for the credit union, but I was the interim president CEO. So my members had access to me and I could build relationships. So relationships are really, really important when you're dealing with financial services, and it makes it easier through the process when they get to know you and you have a good relationship with them.
Right, right. So continuing on with our chess versus checkers, and understanding the rules. You started off talking about fees, but what other rules should we be aware of to play chess?
Understand the big one right now is really fees because now they're fee heavy. They have to find a way to make money. So now you'll find that if you don't have a certain minimum balance, they're going to start charging you fees.
Hmm.
I think Bank of America tried this years ago. I think it was Bank of America, but they tried to charge you for your debit card, and then there was a big backlash, and so everybody wanted to come to credit unions, which was great for me at the time. But you'll find that some financial institutions will charge you to have a debit card if you don't have direct deposit, right? Um, the biggest thing I can say is, ask about the different fees because they can sneak up on you. I had one account where I had a savings account. I had no transactions. So because I had no transactions in the savings account, I was
They were
just putting
taken
money
out.
there. They were
Hmm.
taking money out. So
I had that as well. And
it
I
would
didn't
defeat the
check it
purpose.
for a few months. And next thing I know, I see like minus $5 for
Right.
several
And
months. And
so
I'm,
that could be called a dormant fee, right?
mm-hmm.
So if your account is dormant for 6 months or 3 months or whatever, there's no activity, you're going to get hit a dormant fee for no activity. Now, a dormancy fee, financial institutions charge that because it costs us money to maintain your account, whether you do transactions or not, right? That's an expense to us. So in order for us to offset the expense, if you're not giving us any transactional type of revenue, then we're going to charge you a dormant fee.
Mm-hmm.
And that's a deterrent. That's one of those behavioral fees. If you don't want us to charge you this fee, then you need to have some activity. Because after a certain amount of years, we have to give that money away to the state. It's called a sheet, right? We have to sheet your money to the state if you're dormant for 5 years or more. And so
Mm-hmm.
now you're not going to be able to get the money from the financial institution. You have to go get it from the state. So sometimes we charge you that fee to remind you, hey, we need some activity, or to make sure you're still alive, or to make sure you still at the same address or
Mm-hmm.
whatever, because we don't want to have to give that money away. Because if we have to give that money to the state, that takes away from our capital.
Right, right. So let's talk about winning the chess game, right? So we talked about the fees, and that, in my opinion, that's like a defensive play. Let's talk offense. If we're gonna
Mhm.
use the football analogy here, let's talk offense. What are some of the things that we should be doing, from to really push the ball forward?
One, find out if your financial institutions have any type of investments, or if they do investments, or they have an investment advisor, right? So if they have an investment advisor or different types of investments, that's going to help you to start the process of investing if you don't want to go on the stock market, whether it's an IRA, CD. If you have a CD, one of the things I tell my clients all the time, say if you got $5,000, you want to open up a CD. Don't open up a $5,000 CD. Don't do that. You want to do what's called staggering. Okay. So you want to have a $1,000 CD, maybe a $2,000 CD, maybe a, $500 CDs or whatever for the same time frame, making the same amount of interest. And you're going to earn the same amount of interest with those different, the different CDs. But the reason why you want to stagger is, what if you need some of that money? You need $500 for an emergency or whatever. You don't want to have to break the CD and get a early withdrawal penalty for $5,000 if you only need $500. You know what I'm saying? So that is the importance of staggering investments in, especially with CDs. You want to, before you apply for a loan, ask questions. What are they looking for? What are their rates? One thing that I ask financial institutions all the time, they may or may not tell me, is, what is the rate? What does my loan have to be at least? My credit score have to be at least in order to get approved for a loan. I want to know that, because if I know that my credit score is 550 and they require at least a 600, it's a waste of time for me to even go and apply. Find out if they have a second chance program. So if you have bad credit, or if you have, checking accounts that were in collections, find out if there's second chance. If they have a financial advisor on staff, that is very important, because that person is probably not going to charge you. It'll be free for you to have a conversation. So that begins that process of working with a financial advisor. Most people think that you need to have hundreds and thousands of dollars to work with a financial advisor or a financial planner. You really don't. You can speak with people at no cost to you and start off. So you really want to start the conversation. And most importantly is build the relationship. Build the relationship with the tellers, build a relationship with the branch manager, build a relationship with a member service representative, at least one or two. And if at all possible, build a relationship with the CEO of that financial institution. So if anything happens, something bad happens or whatever, you can communicate with someone. You can call someone. You can name someone by name to do that. Most of the time, if you're in big banks, you're just a number.
Yes, that's
and
true.
So if you are just a number, you have to wait in line.
Mm-hmm.
So in every financial institution that I have a relationship with, except for one that I'm about to close out because they can't seem to find, they don't have a pool of Black professionals that they can find. So
okay. All right.
I'm about to help them out and take my money out of that account and close that account. But with all the other financial institutions I have a relationship with, I either know the CEO or at least the branch manager or someone that I can call,
mm-hmm.
or go in and ask and speak with and sit and talk with.
Yeah. So I will tell everyone a funny story. When the PPE loan initially came out, I have a family friend who was telling us that he contacted the CEO of his bank, because he knew the CEO, and got 7-figure PPE loan because of it, just from knowing the right person. So what I always tell all of you is, it's not what you know, and it's not who you know, it's who knows you.
It's who
and
knows you.
Who knows you, exactly. Because he picked up the phone and said, this is so and so. The CEO wasn't like, who's this? Hey, how you doing? What do you need? Oh, okay. So his application went close to the top, because if you're at a small bank, if you're at a small bank that's so publicly traded, you could become a shareholder, buy a share, buy some stock in it. And then what happens is you're invited to like an annual meeting or a function like that. I have an account at a small bank, and because I was close with the banker and they were very like a business friendly bank, I would get invited to like the social events that they would have for their entrepreneur clients. Mm-hmm. And I got to meet other entrepreneurs, and I got to meet the higher ups. I don't know if I ever met the CEO. I probably could have if I thought about it. But they were all there because they wanted to hobnob with their small business clients.
Right. We do that on purpose. Mm-hmm. Okay. We do that because we want the small businesses to know that we're there for them, and we want them to open accounts with us and apply for loans and do that. So the best way to do that is to host or to sponsor a social event. One of the things, as a credit union member, is that I don't have to buy stock. I just have to open up a share account or a savings account, and I'm already a member. So I'm automatically going to be invited to the annual shareholders meeting. And you want to go there because you can vote. You can see the people that are running for office. You can hear the decisions that's going to be made. You can make motions. You can do all that if you're local to doing that. So that is the benefits of establishing relationship with small banks, small community banks, and credit unions.
So we're about to wrap up here, but I want everyone in the chat, tell us one thing that you learned today that you're either going to implement or that was just reinforced with you. We want to hear in the chat. I'm going to read those off as they're coming in.
And I have one more thing that I want, one more suggestion.
Yes,
when we're talking about closing the wealth gap. Okay, it's one of the things that I helped a couple families do. They were having family reunions every other year, or every year they were having a family reunion. And it was about spending a whole lot of money, coming together, having fun and all of that. And I asked one of my friends, I was like, so where's the wealth building in a family reunion? Where is, how did you write anything off? Were you able to write anything off? Right. And they didn't know what I was talking about. So what we did was we created their family fund. Okay. So they were Adams Family Fund. And so what that did is every family member, instead of having a family reunion every year, they had it every other year. And the off year, the money, whatever they would have spent, or a fraction of that they would have spent by coming to a family reunion, they would put it in this fund that was managed by a financial advisor. Okay. And then the years that they did come into the family reunion, they would have a business meeting to talk about how they were going to invest the money in the family fund. And then they would have financial literacy trainings for the family at the family reunion. And that could have been maybe 2 or 3 hours out of the family reunion. But, they were able to say they went to a business meeting, and they were able to write off some things for the business meeting for the family reunion. The other thing is I talked him into incorporating his family, turning his family into a business, right? That's what a lot of that's what they do. And so when they have a family business, when they go to the family reunion and they have this business meeting, now that trip can be, or a portion of it, or something can be written off as a business expense. Okay. So we have to start thinking more like a corporation, what's like business people, because that's what the other cultures are doing. And instead of us spending money and giving the money away, we need to figure out how we can keep the money in our family, keep the money in our community, and build it and grow it so that we have a legacy plan for our family, not just our nucleus. It starts at home, but we also have to look at the whole body of our family and how our family is going to live out a legacy.
So I'm going to promote the 10K project in one of the members only events that we had. And that was a family that came on that talked, a Black family, talked about their family bank, how they got started. They started with $25 per family member per month. What did they do with the family members that didn't want to give $25? What did they do with the family members that started giving $25 and then stopped? This family started off $25 per month per family member. Now they have 7 figures in cash and assets. They stayed with us for an hour and a half. They talked about loaning money to family members, what terms that they have for the family members, what did they do if the family members didn't pay? They had their family reunions. They talked to us about providing certain entertainment for the family reunions in exchange for them coming to learn financial literacy. And how did they do it? And, how do you handle the family members that are intimidated because you're talking financial literacy? All of those things. I'm telling you, for some of you, the $100 would be worth it just to hear that.
Yeah, the $100 would have been worth it just for that
That one thing.
Just that one,
They talked
thing,
about
right?
what they invested in as well. They invested in a long time ago, casinos, the things that they're investing in today. How do they make those investment decisions? I'm telling you that one, for some of you, that one family
It's a
bank
life,
webinar is going to be
it's a life
completely
changer.
worth it.
One of the questions they said is, what if it's set up as a nonprofit? I would definitely consult with an accountant as it relates there. I'm not an accountant, nor do I play one on TV, and nor do I want to be. My best friend is an accountant. So I would consult with your accountant as to how, when you set that up or you set the family fund up as a nonprofit. I don't know that I would set it up as a nonprofit. I would probably set mine up as an LLC because we expect to make a profit and we would have, officers and all of that. So, yeah, I would definitely talk to an accountant. Also, someone else, Virginia says she needs to learn her officer's name. Yeah, you need to go in there and start asking people's name. Give them
33
Christmas
years,
cards.
Virginia? Yes, you need to know everybody up
Everybody
in
needs to
there.
know you.
Yes,
You need to walk
everybody
in and
needs.
they need to know you by name. Stop
And
playing.
that guy, so I'm sorry, there were two gentlemen that came for the family bank. One of them talked about how he got to know everybody in the bank and they know him and the bank is begging him to borrow money.
Yeah,
I
yeah,
mean,
yeah.
go ahead. I'm
If
sorry.
we know good people and we
Mhm,
know you're going to pay us back, or
mhm.
you have a lot of assets, like if I know that you got millions of dollars someplace else, but you only have $500,000 with us, you're gonna be my best friend because I'm gonna need you to bring some of that money over here, right?
Yeah.
I need you to borrow money so we can, have interest because I know you're gonna pay us back. So yeah, when they know you and you're good people, yeah, there's awesome benefits
Yeah.
of building
Chestnut
relationships.
checkers. Chestnut checkers.
That's the
So,
best. That's the
boys,
best chess move you can ever made is building relationship with the right people at your financial institution.
absolutely. So Boyce is saying, we'll communicate more with my financial officer. We talked about what Virginia said. Stephen is saying, I need to get more involved with the credit union. Yeah, absolutely. Um, and then Vanessa saying, I learned that it's good to think like a business person as incorporating in the family. Perfect.
Mhm.
Percy is saying financial behavior with the institution I do business with and a meet and greet is necessary. Yeah. Charles is saying it's about who knows me. I'm telling y'all that's my mantra. I really should like trademark that or something because I've been saying that for years. I am kind of antisocial, so I have to step it up if I'm trying to get the bag for real, for real.
That's
Yeah,
like
but I
saying,
think there are some
that's
ways.
like saying, I want to get married, but I don't want to go out and meet nobody. Come on, boo. Need you to work that out. You can do it.
Well, I was going to say there are ways to ease yourself into it as well, you know.
I mean, and some things are just uncomfortable, especially if it's new things. I'm an introvert. No one believes me, but I am a true introvert with extrovert tendencies. I
Mhm.
prefer to be home alone. But when I go out, I'm out.
Yeah.
But I had to learn how to do that. So it is a learned behavior for some of us.
It is a learned behavior. And I would say, you know, you may start off going with what I call a wingman or a wingwoman, somebody who is an extrovert or doesn't mind going up and talking to complete strangers and, you know, and they know how to guide you into the conversation.
That is absolutely right. Because I was the one going out to networking events and all of that. And my best friend did not want to get out of bed. So there was a couple times when I went to her house, got her out of bed, put her in a suit, and took her to networking events
Now, I'm
and
not
taught
doing all
her.
that.
No, I did. And I taught her how to network and what to do.
Uh-huh.
Now she is the networking queen. And now she has to pull me out places.
Kimberly is saying, Jay-Z says, I'm a businessman.
Yes.
What was reaffirmed here is relationships matter, especially building family legacy. Lastly, I can be a board member of a credit union, been there for over 25 years. Yeah, y'all are not leveraging these things.
You just
George
have to
is saying,
find out what the requirements are to be a board member president. Most of the time, people on press, it's like the Supreme Court. Most of the time, they have to die off. But if they, change guards every couple of years, find out. Put your hat in.
who knows? It's who knows you. Trust me, everybody will know you then. or the right people. It's about the right people knowing you. I'm going to say that. George is saying, for the investment part, yeah, LLC would be better. That's my plan if the family wants to move forward with the family bank or investment fund. And Deb is saying, I learned about asking for an opportunity to have a denied loan application reviewed again. Virtual hand clap for Tarra Jackson. Thank you so much for being here with us today. I learned a couple little tips. We are going to reduce the wealth gap. I personally believe it starts off with you as an individual, what's happening in your house, and we are expanding this to the Black community. So we want to thank you. People are saying they need to watch the replay. Go to YouTube. It may take an hour to render, but YouTube is the best place. It's on Facebook. So yeah, and then we will also put it in the newsletter that is coming out on Friday. So we're trying to send our newsletters out Monday, Wednesday, Friday. Okay, everybody, have a great day. Thank you, Tarra.
Thank you.
Bye-bye.